What's up everybody, Nate here, and the growing debt bubble across the world is getting ready to pop. The United States recently reached its debt ceiling. Meanwhile, countries across the planet have borrowed more than they can probably pay back. And now the World Bank and experts are saying that the entire world economy is about to plunge into a prolonged recession. So how exactly did we get here? Well, I first want to start with the United States debt ceiling. Now, a few days ago, the United States hit its debt limit, meaning that the entire United States Congress can no longer fund new bills and pass anything else until they decide to raise the debt ceiling. They can either do that or they can come up with some type of restructuring plan with the Treasury Department to find new ways to pay their bills. This means that they're going to have to find other places to recoup some of that debt. So they're going to have to pull money from other forms of taxes, or they're going to have to print more. Now, you've probably heard of the United States reaching its debt ceiling before, and that's because it absolutely has. Back in 2021, it reached the debt ceiling and Congress had to pass new bills in order to raise it so that way they could spend a lot more money. You've also probably heard that the debt ceiling doesn't really matter. I mean, Congress just keeps extending it and the United States just continues to take on more debt and then pay down that debt as the years go on. So there's kind of some truth there. So what you need to understand about the United States and its money, and more importantly its debt, is the United States currency, the dollar, is the world's reserve currency, which means other nations around the planet are using our money and they want to collect and hold on to it because the United States economy and our entire country is perceived as being very strong. We also have the United States military backing our currency and our government, so that gives it inherent value that is a lot stronger than a lot of other nations. So when we talk about the debt ceiling, as it stands right now, the United States can afford to continue to borrow more, but that creates a lot of other problems. For instance, it creates a lot of inflationary problems. The more the United States spends, the more that anybody spends, the more inflation you're going to have. And over the last couple of years, we have had a huge inflation problem. Now, that inflation problem was for a variety of different reasons, but one of the main ones was because the United States Federal Reserve dropped its benchmark interest rates to 0%. Now, what that sort of did was incentivize spending on every single level. Consumers were spending more because they could get a mortgage really easily. And now governments were also starting to spend more, right? Because interest rates were really low and you saw a ton of bills get passed from the United States Congress. Now, this was in response to the pandemic, and we had really low interest rates, not just in the United States, but across the world. And that meant that world governments also started to spend at a record pace. So because the United States dollar is the world reserve currency, they can get away with continuing to add on that debt and add on that debt because other countries get a whole lot wealthier when they take United States dollars, and the US dollar is the reserve currency of the world. If, for instance, the United States was not the reserve currency and it was continuing to take on all of this debt and nobody wanted US dollars because of high inflationary measures and the dollar was becoming devalued, well, then the United States would default on a lot of its debt, and that would be a huge problem. It could essentially send our country into a recession and have a rippling effect across the entire world. Now, there's no doubt in my mind that Congress over the next few months is going to pass a new debt ceiling limit, but that is not the only concern here. We have a worldwide debt crisis now. As I mentioned before, all of these countries have taken on a ton of debt, whether it was because of the pandemic or wars in their area. Now, this is a huge problem because the entire rest of the world is also interconnected through globalization. So you have all of these other countries, namely China, who have given and loaned out money to a bunch of other nations. But the issue is a lot of those other nations are no longer able to pay their debts. We saw Sri Lanka actually file for bankruptcy and default on its debt in 2022, and China had loaned them a ton of money, which means now Sri Lanka is no longer able to pay China. So where does China get that money from? Well, the answer is nowhere. All of these other countries are sort of interconnected, and you got to remember, when interest rates were really low, it was easy to pay back a lot of that debt, but government debt is also adjustable. So as the Federal Reserve, as a lot of these other countries like the UK, well, that means that you have a lot of these countries that can no longer afford to pay all of that interest. It's getting a lot more expensive to not only borrow money, but to pay for the money they've already borrowed. The Federal Reserve here in the United States, with them raising interest rates, well, that has a lot of implications on what consumers and our government and companies are going to be able to do. For instance, companies are already starting to cut back on a global scale because they're not able to hire as many people and they don't have the money to actually go out and invest in their companies. So they're not getting that cash flow because interest rates are really high. So investors are pulling out. They're also not really getting a lot of consumer money because sales are really low too, because consumers have to deal with inflation. So what's really scary in the United States right now is that the Federal Reserve hasn't really won the fight on inflation just yet. We have seen inflation go down generally in our economy, but food and energy and a lot of other things are staying really high price-wise in the United States. So the Federal Reserve has not fully won its fight on inflation, and they might over-tighten, which means that jobs are going to get lost. Companies are going to have to cut back even more from where they're cutting back right now. And you're going to have less people going out and getting things like a mortgage, going out and getting things like an auto loan, spending on credit cards. All of these things are affected by Federal Reserve interest rates, and with all of that spending going in the gutter, that means we could go into a prolonged recession. But matters on the global stage and in our individual communities in the United States could actually get a whole lot worse, because when you have a lot less spending, sure, you're going to have businesses start to fail. You're going to have industries go down in a lot of other countries, but think about what that actually means. Businesses, corporations, industries suddenly disappearing means all of that money disappears too, and all of that money that was funneling towards education and innovation in those places. What we typically see in recessions or times of really high inflation is that the rich just simply get richer and the poor end up getting poorer, and that sort of creates a further divide between the haves and the have-nots. Now you have a lot of countries or a lot of areas in the United States that were up and coming. Suddenly education is slashed there. Suddenly all of the money that they were using to fund their industries, to fund their businesses, well, all of that money's gone too. That has a trickling effect, and if something like that was to happen in the United States, well, again, because our money is so valuable and it's used on the global stage, that's going to trickle to all of these other countries. Now all of these businesses, well, they want to invest and they want to spend money on what is making them money, right? They don't want to put any time or effort into something right now that isn't going to make them money, because that puts the entire business at risk. So they might cut tons of jobs overseas, they might shut down factories, and that is going to make those areas a whole lot worse off. Now you got to think, what exactly is the solution here, right? How can we sort of avoid all of this and get back to growth for not only our economy, but the world economy in 2023? Well, the problem is we're kind of running into the perfect storm for all of these economic issues. All of that money that was printed by the Federal Reserve, all of the money that has been printed by central banks everywhere, well, now it's out there. It's already spent, and now somebody's got to pay. That was really easy when interest rates were at 0% from the Federal Reserve and other central banks, but now it is nearly impossible because the dollar is so strong. It's so valuable because interest rates are so high. It is nearly impossible for anybody, governments included, to actually take on debt right now. So now you have governments who have all of these bills, but they don't have any money coming in, which means full-blown collapse. The problem is you can't eliminate all of the value that those dollars have already created, and you can't bring back that money. So all of that money is out there, and it's sort of just waiting to be spent at this point. And what this all sort of boils down to is a serious problem of instability. Now you have a lot of countries that are losing money. That makes them a lot more poor. And when you have countries that are that unstable, well, people start getting a lot more desperate, and without education behind them, you have crime rates going up. You also have wars that get started because countries are desperate for money and they're trying to figure out any way to sort of get it. And that creates a lot more problems for inflation and our own economy here at home. So basically where we're at right now with the economy is the United States economy is still reasonably strong, and it probably will continue to be like that because we are the world's reserve currency and our economy and our military is backing us. But that doesn't mean that the United States is immune just because all of these other countries are having problems, right? Other countries having problems because the entire world is so globalized, that affects us too. Last thing the entire world needs right now is for the United States to default on its debts, but trust me, I don't think that's coming anytime soon. What's more likely is you're going to see a systematic failure of governments unable to pay their debts and then businesses unable to pay their debt. And that's going to cause funding to be dropped in many countries for education and business development, which is going to cause some serious instability. And until inflation comes down, well, the Federal Reserve is the serious problem here. All of these countries now have all of this debt to pay back with a really, really high interest rate that used to be zero just 2 or 3 years ago. But the Federal Reserve wants the United States dollar to remain the reserve currency, or else we will run into the same problem. So they have to continue tightening, they have to make the dollar strong, or else if the dollar loses value, then it's not going to stay the reserve currency. Another country might start to grow and become the reserve currency, and all of that United States debt is going to be a serious problem. The World Bank is preparing, CEOs on Wall Street are also preparing, and you need to be prepared too. Nobody knows how serious this event is going to be, but in all likelihood, this could be a huge setback for the entire planet. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That's it for me, everybody. Be kind out there, and I'll see you all in the next one.